So if you're on the hunt for a new home, like I am, then you understand how bizarre the US real estate market is right now. And if you're one of the lucky people to have bought real estate pre-COVID and blissfully unaware of the state of the market right now, let me paint a picture for you. Between April of 2020 and April of 2021, median house prices rose 19% to $341,000. That was the average home price in April of 2021. Over half of home buyers are putting at least 20% down, which is the highest in history. And in Austin, Texas, since January of 2020, 1,500 homes have sold for more than $100,000 over asking, 72 of which sold for more than $300,000 over asking. And a funny situation in Denver, Colorado, a urine-saturated, feces-infested, vandalized home sold for $590,000 after receiving 16 cash offers after only being on the market for 24 hours. This is a small glimpse of the insanity of the current real estate market in the US. Now, this is great news for sellers, but it's incredibly bad news for buyers, especially first-time home buyers like myself. So what is going on here? Like, what is causing this madness? Well, as much fun as it is to point the finger at a single villain, I think the situation is much more complex and nuanced than that. I think this frenzy was caused by several factors, much of which was ultimately fueled by the pandemic. So I'm going to break it down here. This video might be a little longer, but I hope it's helpful. And for the record, I'm not an economist and I don't work in real estate. I'm simply a financial planner trying to buy a home at the worst time in history. So number one is the housing supply shortage. So taking it back to Econ 101, when supply is down, prices go up. And right now there's a big shortage of homes. Over the past 20 years, construction of new homes were 5.5 million units short of historical levels. So in the same report put out by the National Association of Realtors, where I got that number, between 2010 and 2020, we needed 6.8 million more homes than were constructed due to population growth and deterioration of old homes. And part of that is due to the delays during the pandemic, where construction was shut down in many parts of the country in spring of 2020, thereby reducing the supply of homes even more. In fact, the monthly housing supply, which is the ratio of houses for sale to houses sold, went from 6.6 in April of 2020 to a near all-time low of 3.5 in August of 2020. So what this means is that if no new homes were built, there would or put on the market, there would be no more homes for sale in 3.5 months. To put that in perspective, this number was between 10 and 12 during the 2008 market crash and has since hovered around 5.5 for the past 10 years. But 3.5 is really low. So supply is part of it. But number two is wealthy individuals. So on the other side of the supply equation is demand. And not only did the pandemic contribute to the low supply of homes, but it surprisingly contributed to the rising demand for homes. So demand for second homes nearly doubled pre-pandemic levels. The number of buyers who purchased a second home in April of 2020 was up 178% from April of 2020. And then demand for primary residence was up 78% over that same time period. And this past year was, financially devastating for the lower middle class, but it was really financially prosperous for middle upper class. For those fortunate individuals who did not experience any interruption in their income, they had the opportunity to not only save more because they had reduced expenses but dependable income, but they also had the chance to invest in the stock market at really the best possible time, which was back in March of 2020 when the market tanked. They had disposable income that they could invest, and they could easily double cash that they invested over the course of the year by simply investing in the market when it was at the bottom. And the end result is a lot of middle upper class or a lot of wealthy individuals ended up with a big chunk of liquid assets at the end, waiting to be used. So with buckets of cash on hand, wealthy individuals have been able to make sizable down payments and offer significantly above asking on these homes, with the hopes of owning rental properties or second vacation home. But for those without substantial cash for a down payment, this makes buying a starter single-family home very difficult. In some cities, a 5% down payment just isn't going to cut it. Since first-time home buyers are competing against buyers who can afford a 20 to 30% down payment, which is just more reliable, more attractive offer for sellers who are anxious to close. So that's another aspect of it. And then number 3 is institutional investors. Wealthy individuals aren't the only ones seeking out homes for an investment opportunity. Private equity firms are also buying single-family homes for the purpose of renting them out to families across the country to create this stream of cash flows. You may have seen a Wall Street Journal article back in April that shared a story of an investment firm buying an entire neighborhood in Conroe, Texas. And this article sparked a lot of concern over investment companies outbidding individuals and driving the price of single-family homes even higher. And there's a lot of debate on, how much market influence do they actually have over single-family homes. But these firms most definitely play some role in the rising home prices. I don't know if it's they're entirely to blame, but they do play a role. Anecdotally speaking, I recently visited a home for sale just a few hours after it had gone on the market, and the selling realtor informed us that they already had 2 offers from investors. Now, whether investors means high net worth individuals or institutional investors, I don't know. But the moral of the story is really the same. Big money is coming into these single-family home communities, offering large down payments, sometimes all cash, and offering way above asking, thereby pushing out lower middle-class first-time home buyers. Now, I'm not saying that it's impossible for first-time home buyers to get something. It's very difficult in this market. And then finally, my last point, which is the obvious one, is low interest rates. Wouldn't be a complete discussion about mortgages if we didn't talk about the historically low interest rates. Driven by the near 0% federal rate, mortgage rates are at an absolutely all-time low. When I looked it up, it was like 2.93% for a 30-year mortgage on average. So this extremely low cost of borrowing makes the demand for houses even higher, as many people are trying to lock in a mortgage rate a low mortgage rate that they'll possibly never see again. So what's next? How is all this going to end? If I knew that, I'd be rich and I wouldn't be in this situation where I'm trying to buy a home now. But unlike the 2008 housing crisis, which was driven partially by banks offering loans to uncreditworthy borrowers, a lot of transactions today driving home prices higher come from wealthy individuals or multi-billion-dollar investment companies who can not only afford to make payments on expensive homes, but in many cases are buying these expensive homes in cash outright. So I have no idea how this ends. It seems like the rising prices are unsustainable. It's getting ridiculous. But I said the same thing 3 years ago. And since then, the market growth has continued. And I don't think anyone would have predicted that in a year of a pandemic, the real estate market would be the highest we've ever seen. And I think that just goes to show that we can't predict the future. So if you are a seller right now, good for you. I'm happy for you. If you're a buyer like me, I'm sorry, and best of luck to all of us. I hope you gleaned something from this. This is just sort of my take on why the real estate market is booming right now. I'm sure I left out many other valid points, but I hope it was helpful. Thanks for watching. Have a great week.